Hey everybody, welcome to the morning market briefing Friday, June 24th, 2022. Hope you are doing well out there. Nice little week for the market, Ben. Dow futures up 76 basis points, S&P up 80, NASDAQ up 85. A couple green days in a row. How you feeling?
Yeah, I think that this was, we talked about it last week. The sentiment was really bad. There wasn't much news coming this week. It seemed like there could be a little bit of a relief rally going into the end of the quarter. Wouldn't be surprised if this continues for another week or two. Seems like inflation expectations have come off a little bit, and we can talk a little bit more about that. But yeah, I mean, that's just on the day, just pre-market up 80 basis points. I mean, for the week, you got the NASDAQ up 6.42%. S&P 500 up 4.48% and the Dow up 3.52%. So pretty good week. First up week it would be if we do finish, unless barring something catastrophic.
Yeah, 7% down on the NASDAQ.
If barring something catastrophic, this would be the first up week since the week ending May 27th. So before Memorial Day. So interesting statistic there.
Is America back? The people want to know.
At least until July 4th. We had a good Memorial Day to July 4th run, I think. And then we got to start worrying about June data when that comes in second week of July. And then we got to start worrying about earnings as they come in third and fourth week of July.
Yeah, we've seen a lot of movement. 2-year, 10-year, 30-year yields, all moving around a good bit. I mean, the 10-year is maybe the most representative. I don't know if you would agree with that, but opening the week at 323, moving to 309. Little bit of movement there, kind of thematically across the board. Continuing to see kind of an interesting fixed income market, in my opinion. I mean, having a 2-year that pays you 301 versus a 10-year that pays you 309 certainly indicates what part of the curve I want to be on.
Yeah, exactly. I think that right now we're more cementing in those expectations that inflation is not going to be here. It's going to burn hot and then it's not going to burn at all. And when it stops burning, interest rates stop going up. In fact, right now, interest rates are expected to decline this time next year. And basically, if you follow the flow chart here, what we had this week was we had lower oil. Lower oil means lower inflation expectations. Lower inflation expectations mean lower interest rates. Lower interest rates, more contained interest rates mean a higher stock market, especially in tech, which is why you saw the rally in NASDAQ. And so it's really all, in my opinion, a bit of a function of oil. It just really gets that sense that instead of inflation blowing off to the upside, you're actually seeing it maybe come back in a little bit, supporting the Fed's narrative and then supporting potential containment on those interest rates. Whether it's a head fake or not remains to be seen.
Anything that changed your mind this week as it relates to underlying economic data, your view on the recession? I mean, I think you and I both think we're in one. Anything that would change your mind on that?
No, not really. And in fact, I think that perversely, the reason the stock market has rallied, if you then go backwards around in the flow chart, the reason the stock market has rallied is actually a function of higher probabilities of recession. The reason oil prices have declined is because it's more likely that oil consumption is falling because economic activity is slowed. And so it's almost counterintuitive. When economic data slows, you actually have an increase in the stock market. And that's kind of this reverse Fed action. This bad news is good news, because bad economic data, low oil prices, lower inflation expectations, contained interest rates, high stock market. That's the flow. And data actually continues to deteriorate. We got PMIs yesterday from S&P. The big ones come next week with the ISM data. But the S&P manufacturing PMI went down to 52.4, down from 57. The estimate was for 56. So big disappointment on manufacturing, big disappointment on services. That went down to 51.6 from 53.4. So another decline there. Estimate was 53.3. This morning at 10 a.m., we get University of Michigan Sentiment Index, which will probably be pretty negative. So again, it all leads up to the Fed is not going to be as hawkish as feared because inflation is not as bad as feared. Now, I think June data might beg to differ with that when we start to get that in July. But for now, we can kind of climb this wall of worry and rally into month end.
There we go. FedEx reported earnings up close to 3%. Okay results. I mean, not necessarily stellar, I wouldn't suggest by any means, but maybe seeing a little bit of a shift in market sentiment where EPS came in where it was expected to be, but they were boosted by 18 cents a share on the tax benefit side. Revenue came in lower than expected. They missed on revenue for FedEx Express. They missed on revenue for FedEx Ground. FedEx Freight had a nice beat, but kind of at best, I would argue a mixed quarter, but the stock's up, which may suggest that sentiment's starting to shift a little bit, at least for the moment. For a while, it felt like we had companies that, going back 3, 4, 5 months, it felt like companies were reporting really good earnings and still getting punished. This was pretty so-so and getting a little bit of a pat on the back.
Yeah, and it's actually performed fairly well over the last 2 weeks too, because they came out with an announcement of a dividend. FedEx is interesting because it's actually at odds with what we were just talking about. We were talking about the market narrative of oil prices, and I call it a market narrative, and I choose those words very carefully. The market narrative of lower oil, lower inflation, because FedEx is not seeing that. FedEx is actually saying, I mean, just look at the numbers. FedEx Express, average daily volume down 11% year over year. Average yield up 25%. An acceleration from 23%. That's pricing per package, essentially. FedEx Ground, volume down 6%, pricing up 11.4%, an acceleration from up 10.6% last quarter. FedEx Freight, get this one. Daily volume was down, but the revenue per 100 pounds of weight was up 30% on a year-over-year basis. So when we're talking about inflation coming down, that's not what FedEx is seeing. And they also provided guidance. Their fiscal year ended in May. So they provided guidance for the next fiscal year. And they said, we're confident we will continue getting inflation passed through in pricing. They said they'll take cost and revenue actions to mitigate impact of further economic softening. And we'll prioritize, and this is important, we'll prioritize revenue quality and business that, quote, provides attractive yield on our assets. All this to say, FedEx is looking for lower volume and higher pricing. They did guide to volume in the low single digits for next year, which is relatively positive, although they said that this next quarter is going to be weak. So expect another soft quarter in terms of volume, but really strong in terms of pricing. So what this means is negative GDP, high inflation. That's what FedEx is saying. That's what the companies are saying. The economic data right now, in the absence of economic data, we're just responding to oil prices. And because oil prices are down in the last week, everyone thinks that inflation is starting to lose its impetus. But I also would caution that that might be too myopic of a view.
Fred Smith, man, last quarter CEO.
Yeah, it's his run. Yeah, it's his last quarter. He's the founder. He handed over to Raj Subramanian. Subramanian, to his credit, is emphasizing return on invested capital. The big hit for FedEx over the years has been, are they actually making returns on? They run a very capital intensive business, a lot of aircraft, a lot of distribution centers, et cetera. Can they actually generate returns on that investment? So that's what the new CEO is focused on. And to do so, he's really focused on revenue quality, which is code word for pricing. So it's really interesting to see all that. You do have Bullard's comments coming out this morning. Jim Bullard, the St. Louis Fed president, is continuing to talk about potentially soft GDP, but that might be misleading. So you got a lot of the Fed presidents and the policy people talking about how if we do see a negative GDP print, that will probably be a misleading print. And he does still want interest rates at 3.5% for the year by the time the year's over. But he does think at that point, we might be good.
Yeah, if you see any underperformance in your accounts, it's probably a misleading print.
Yeah, I mean, that's basically what he's saying.
I don't mean that, Compliance Officer Hicks.
So it's an interesting dichotomy right now with the slow news flow, because I think that macro investors are talking about oil. Micro investors are not seeing that. And you have this stagflation weird reality where you can actually have increasing revenue, but decreasing unit volume, which means people can buy less stuff. People feel poorer, but companies are still generating good revenue.
It's been kind of a weird week. It's been quiet. I mean, last week obviously was chaotic, lots of client interaction, all those good things. We're always happy to do them. Usually I feel like summer's a little quieter period on that front. This week has been much quieter. In a way, it almost feels like the market just kind of needed a break. I mean, it sounds odd and superficial and emotional, but the market seems to be moving, yes, on all the things you mentioned into the end of the quarter, but also it seems to be almost self-perpetuating, like the notion that we need some stability.
Yeah, everyone's just kind of taking a deep breath. And I think that, when we got a comment on last Friday when we did our Q&A show, that it was just nice not to have to look at the red on the market screen. And I think that that's, it's not just for clients, it's not just for us, but it's for a lot of the investing populace. We've seen a low volume rally. It's a bear market rally. Yep. And that's what it is. And we got to be smart about navigating through that and now setting up the chess pieces for the next move.
Yep. We're going to wrap it up there. Light news day. We will have the weekly market memo coming out into everybody's emails around 3 p.m. today. So be on the lookout for that. We got an investment committee meeting today. So we'll be kind of hashing those ideas out as well as looking at some new ideas we have. Just trying to stay disciplined, stay tight, take advantage where we can. But hope you guys have a great weekend. We will be back every day next week. We are off on the 4th of July. But every day next week, we'll be here at 8:30. Hope you guys have a great day.